Should you invest in commercial or residential? What's the answer?
Both. Yes. Both.
All right, so we got both. We got both.
I would say commercial, but if you can find a good deal, residential, a really good deal, then obviously anytime you find a good deal, whether it is residential or commercial, go that route.
Okay.
You're chasing ROI for commercial.
If you're what?
Chasing ROI.
ROI. All right.
Chasing returns and commercial.
So you're the only one who've said commercial. So why do you say that?
Because residential has its limits.
All right.
You can make a lot more money in commercial, it just takes longer.
Does it?
That's what you told me.
No.
The deals take a little bit longer to develop because of all the different.
That's not what I said.
Okay.
I said that
Residential takes longer.
I said you as an agent. We're not talking about commissions. We're talking about investing. I said commissions, sure, residential deal as an agent, you can close in 30 days or so, which you can with commercial deal as well, but typically it's going to be a little bit of a longer time frame for commissions. But we're not talking about commissions today. We're talking about building wealth. Who's ever gotten wealthy from commissions? Anybody here? What is wealth?
Financial freedom.
Okay.
Money working for you.
Okay. You're the only one who said invest in commercial, so elaborate a little bit for us.
Based on evaluation and based on what you're forcing it to be. Rather than company.
Okay. Who here has invested in a real estate investment, not a house you live in? Raise your hand. All right. So no. What have you invested in?
Just a home and clean.
A home and clean? One house? What is it? A rental or what?
Rental, yeah.
You rent it out currently?
Yes.
When did you buy it?
2022, 2021.
You've invested your first investments in a commercial deal?
Yes.
Andy, how many real estate investments do you have?
The last 12 months, I bought a duplex, a triplex, bought into PACE, bought into 2 other syndication, bought a house with 2.4 acres.
In the last 12 months? How much do you own together though?
I'm collecting 11 rent a month now.
Say again?
I'm currently collecting rent, 11 different rent a month.
11 different rents a month? And that's on your own, not including the syndications. Did y'all hear how confident Andy was when he said, absolutely invest in commercial? So just curious, is it interesting to hear the guy in the crowd who has the most experience say, invest in commercial if you want to make the most money? Just something that I noticed, for those who maybe haven't invested too much or in everything that Andy has, residential or both. So the purpose is not to put down residential real estate investments. And investing in general, there's no right or wrong way necessarily. Everybody has different goals, different ambitions, different things that they're looking to accomplish. I would say the only wrong way to invest is not to invest, number one. And then number two, of course, a wrong way would be if you're investing in something that loses money. That's obviously not the right way to go about it. And the reason that we were started off investing into residential properties was because, number one, I think it was just more accessible. We were seeing residential deals quite a bit. It seemed more attainable, and it was easier, I think, for us to get it done. But ultimately, what we were doing, in my personal opinion, is we were thinking small. Do you mind if we run through the numbers on your Colleen property? Do you know them? Because we can run through mine. I'll tell you that pretty much everything here loses money monthly. These right here lose money annually, always. The only ones that are profitable are the ones that we have that are 14 plus units, and on a cash flow basis, for cash flow. Everything else loses cash flow. But the 14 unit, it might not cash flow if it wasn't a mobile home park. So it's a 14 unit mobile home park, therefore there's zero maintenance, the insurance is extremely low because we're just insuring 1 or 2 buildings on it, and it's mostly just dirt. Management is really not that intensive. There's zero maintenance on dirt. So the 14 unit does cash flow. And then the 2 bigger commercial deals cash flow quite a bit. But the residential stuff absolutely does not cash flow, and it won't ever cash flow unless we own it all cash. If we have debt on it, I guarantee it'll never cash flow. Can y'all tell me why that's the case?
Year isn't high enough and the property taxes are too high and interest rates are also high. So it's 3 limiting factors.
Yeah, well, some of these I have actually have like 3.75, 3.5% interest rate.
You can't get enough for rent here.
Yeah, but I mean, like I rent, like one of these I rent out for like $1,500 a month and bought it for like $180. So it's almost the 1% rule, right? So how much rent do you need? Yeah, debt eats a lot of it, but what else eats it?
Depreciation?
No, depreciation is just an imaginary number. So what are your operating expenses?
Everything. Like you said, tax, insurance.
Run me through it. Tax.
Insurance, maintenance, farming management, utility, capital expenditure.
Utilities. Taxes, insurance, maintenance, utilities, management. All right. And then, so these are your expenses. You've owned it for 2 years?
About 2 years. I was gonna say one thing is like we're still managing it ourselves, so that kind of like takes it. We've done a lot of like maintenance ourselves, so that's like another aspect. So like that's helpful, but if we didn't do that, then it would definitely not cash flow.
Yeah. Well, how much does it cash flow now?
Like 150.
A month? What do you rent it out for?
It's 1730.
730?
1730.
1730. How long's the tenant been there?
This current one, like 5-6 months. Yeah, 5-6 months. We had someone else beforehand.
How long was it vacant for?
Less than a month.
Less than a month? All right.
So we didn't have a month mix.
1730 times 12 is 2760. And you had 2 tenants in it so far? So the most vacancy you had is 1 month?
Yeah.
All right. 12 times, but it's still prorated, right? So you're still missing some.
We made the tenant pay through the time just because we let them out of the lease early, so we still make them.
They left the lease early. Got it. Good. Well, it's not normal for things to stay occupied 100% of the time. There's always going to be some vacancy. So let's just say that it is only. Did you have to do a make ready on the unit?
Not really. It was okay. Like the condition was fine. We didn't have to do too much.
Was it 1730 before, or y'all raised the rents?
We actually lowered it like between those 2 tenants. It was at 1775 for the first tenant, but trying to motivate it so it wouldn't be longer than a month empty, we dropped it down a bit. So 1730.
0.12. All right. So if it's vacant 1 month, then you're losing 12% of your occupancy. So that means that if it's only vacant 1 month, you're going to have 88% occupancy. 0.88 times 2760. So 18,268 is gross income. And what are your property taxes?
But 4,000
Even?
4085.
4085. 4085. And your insurance?
I don't know what the number is.
Let's just call it 2,500. Does that sound about right?
Probably less, but
Give me a number. Just make one up. But I want it to be your number.
1900.
1,900. All right. And tenants pay their own utilities, I imagine, right?
Yes.
And you don't pay yourself a management fee?
No.
How do y'all collect your rents and everything?
We have it on apartments.com, so there's no fee.
Collecting rent payments. They pay you by check or
Oh, automatic. It's online.
online? All right. So Yeah, let's just run it with your numbers. So you pay $0 in management. And do you know how much you spent on maintenance and repairs?
Probably like $400 just
For the whole time?
so far.
$400 a year.
We haven't had any major repairs or major maintenance.
Did y'all buy the house in rent-ready condition, or y'all fixed it up?
No, it was ready.
It was rent-ready? Okay. So maintenance, repairs, no commissions, no management, no nothing else, equals 18,268 minus 4085 minus 1900 minus 400. And what are your mortgage payments?
16 something? 15, 20?
And that's principal and interest or PITI?
PITI.
That's the full PITI? 1620.
After that, so that takes off another one. And also I realized we actually had more maintenance, so like probably another like 400 in maintenance just over the winter when they didn't have dry or do anything like that.
Y'all had a leak or what?
Yeah, one of the pipes burst.
So
Outside though, so it wasn't as bad, but
800?
yeah.
Okay. 800 and 1620 is the PITI payment? All right, so, well, I mean, that alone. Do you know what that equals a year? 1620 times 12?
19,440.
Yeah. So 19,440 is your PITI payments. And so that doesn't include maintenance, management, or anything else that you might pay, leasing commissions, etc. So if you do have 1 month of vacancy, you are negative. The only way to make this work essentially is, zero vacancy ever, basically zero maintenance ever, never pay a property manager, etc. But you bought it in 2021. What'd you buy it for?
212.
212. What do you think it's worth today?
Still up there, 245.
All right, how much did you put down?
15? It was mainly because it didn't appraise.
15,000?
Yeah.
Okay, so you maybe have 20, 30K worth of equity in it, correct? Now, if you were to sell it today to capitalize on that, would you be able to get that equity out if you were to sell it today? So it's worth like 240, you bought it for 220, you put 15 down, so principal balance is somewhere around 200-ish, right? And you have 15 in it, 15K in it. Can someone do some math for me? 240,000 times 0.93, what does that equal? 223,200. All right, so if you were to sell it today and pay listing commissions and closing costs, etc., which is 7%, give or take, you'd be left with 223,200. You bought it for 220, so we got, you'd make a little bit out on top. The play with, and I'm only asking you this because I'm also testing my theory here, but we own a shitload of these. We have a ton of equity in ours because we owned them for a long time, 4, 5, 6 years. We also bought them at the right time. We bought a lot of them before 2020, 2021 when values increased 40%. So we also had a little bit of luck on our side, in my opinion. Even though we were buying deals the right way, we also had that behind us, which helped out tremendously. But the way to make money on them is to hold on to them for a long time, get the appreciation, eventually pay off your debt so that you can actually have cash flow. Otherwise, it really is almost impossible to get it in a market like this. And if you go to a market where you may be able to get, I don't know, we were talking about this last time. If you go to a market where you are able to get, call it $500 worth of cash flow a year, give or take, you're not going to have the appreciation like you would in a market like Austin. And it just takes one thing, your water heater. Have you had to replace a water heater, an HVAC unit? You had rats chew through all the vents in the ceiling yet? As soon as one of those things happens, which they always happen, all of your cash flow is gone. no matter what. So it is possible to make money in them. I'm not tearing down residential real estate investments. I own a lot of them. I'd like to sell them all. If anybody's looking to buy, we can figure out a way to do a deal. I've already got tenants in there for you. And I already got a property manager who's overseeing everything. You can take over our existing debt if you want them. I'd be happy to sell you the properties. But it's just not scalable. This is what Andy was talking about. So like in the only way to maybe make it work is like Mickey was saying, is you don't have a manager. You do all the maintenance yourself, maybe, if you know what you're doing. You can't have any vacancy, period. And the moment that something that is out of your control, like the HVAC unit, the water heater, I mean, we replaced so many water heaters, so many HVAC units, and all the shit that comes up with owning real estate. It'll completely wipe out your cash flow. And so it's really, really, really hard to actually make them work to produce income that's passive. And it's absolutely not passive if you're the one managing, doing the maintenance repairs, etc. Right? Here's the other thing too, is just like Andy was mentioning, you are at the mercy of the market. You know, Mickey's house is valued based on what the house next door just sold for, right? With commercial real estate, it's not a business. I mean, the residential properties are not valued as a business. They're valued as a residential home that is worth what the other people are willing to pay for it, given its condition and location and floor plan and all those things. Commercial real estate is a business, and it's valued as a business. Without getting too in depth into how it's actually valued, just know that it's valued based on the net operating income, which is your income minus your operating expenses, which is what we just went over. Taxes, management, insurance, maintenance and repairs, utilities if you're paying for those. So it's a multiple of your NOI, and that changes per market. Like Killeen trades at a lower value than Austin does based on NOI. You can go to Killeen, you have two properties, one in Killeen, one in Austin. They have the same NOI. The one in Austin is going to be valued more than the one in Killeen based on, you know, all the market conditions, right? But it is based on the NOI. And here's the thing with NOI is you can control the NOI. Is that accurate or not accurate? How do you control the NOI? All right, so how would you increase your income?
Find more value and increase the rent.
Or just rents go up over time, right?
Yeah.
Right? $3 a foot per year. Does the value of that property increase? And let's say that market trades at a 7% cap rate. If I increase the NOI by $30,000, everybody do this equation. If I increase the NOI by $30,000 and the market is valued at a 7 cap market, how much did my value just increase? $3 a foot per year. Does the value of that property increase? And let's say that market trades at a 7% cap rate. If I increase the NOI by $30,000, everybody do this equation. If I increase the NOI by $30,000 and the market is valued at a 7 cap market, how much did my value just increase? $428,000. Yeah, we'll round down. So if I increase the rents by $3 a foot for everybody in this complex, therefore increasing the NOI by $30,000, and the market is valued at a 7 cap market, then my value increase is $428,000. How long would it take for this, y'all are standing in this property right here. We bought this for I think we paid $380 for this property a couple years ago. How long would it take for me to gain $428,000 on this property here in value?
20 years.
15, 20.
Yeah, maybe like 15, 20 years in this house that we're standing in. But I gained it in 30 days here. Right? Y'all understand that?
Yes.
And how quickly you can increase the value versus, like I was saying, the residential stuff is just a long play and you're not in control. Here I can go to obviously we can't go to them and charge them more than market, otherwise they'd leave. But you push it and you run the business model to go in and raise the rents as much as you can while keeping your tenants and keeping everybody happy. And when you do that, you increase the value of your property. And that is one of the biggest values in commercial real estate versus residential real estate investments. Y'all following me?
Yeah.
What questions do y'all have so far based on what we've gone over? Nothing?
As you dive into, the approach that you take and TRE takes on finding commercial properties and all that kind of stuff.
All right, we've established how residential properties are valued, right? They're valued based on appreciation. They're valued based on the market. Obviously, investing in Killeen's a great area. Comparatively speaking, it's just outside of Austin, so it's a good area. Killeen is growing. But you're going to get appreciation. Real estate does appreciate, unless it's Detroit, Michigan, which saw the opposite, right? And also, we're blessed to be here in Austin. Not every city and market across the United States appreciates the way that Austin does. Or, Chicago or New York or California or certain places like that don't always appreciate that much. All right, we've established that there is no cash flow. Am I wrong on that? Not. Find me one that cash flows.
No, I said I'm agreeing with you.
No, just in anywhere.
I mean, I think I could, probably.
Find it for me.
All right.
I mean, there's Google real quick how many houses there are in the United States.
There's 100 million single family homes.
All right, well, here's your challenge. There's 100 million single family homes in the country, correct? Mm-hmm. I want you to find me one. You just pick one out of all 100 million and let's look at it. You don't have to have it right now, but I do want you to do that.
Well, I could just do the trick answer of you have one that you have to buy first, right?
Huh?
One you'd have to buy, just like right now.
Well, yeah.
Buying in the present time.
Yeah.
For instance, there's people that live in their house for 10 years, and if they decided to rent it out right now, they cash flow because they bought it for significantly lower.
Would they though?
Yeah, 100%.
Maybe, maybe not.
My parents pay probably $2,200 a month, and they can probably get over $3K for the house. They definitely cash flow, but that's because they've lived in it for 15 years.
But like you said, if you have to replace a water heater or something that costs $20K, it's gone.
So to your point, they will cash flow if you don't have debt on them. So if your debt's been paid off for 20 years, sure there'll be some in there, but maybe, but also maybe not too, depending on if that AC unit goes out or.
It might. It's been acting up lately.
I don't doubt it. But also too, I mean, an $800 difference is not a lot. If 3K is the thing and.
Well, it might be more than that, but.
Yeah.
Yeah.
Yes, that's the challenge. Find me one today that you're going to buy with debt and let's analyze it. I'm just asking for one example out of 100 million. I'm sure there's something out there. All right, so Will has agreed that there's no cash flow in single families, right?
In Austin.
All right. What else did we establish for residential?
In the butt to just maintenance.
Pain in the ass. Let's run through the pros and cons here. Pain in the ass, good one.
The higher vacancy.
Yeah, higher vacancy. Yes, higher vacancy percentage. We've established that it's not scalable. Would everybody agree? Unless you're BlackRock and you're a trillion dollar company. Find me one person. Here's another challenge for you, Will. Find me one person who owns 100 doors of 1 to 4 units, and tell me if they agree that it's scalable and they're happy doing those.
You know who Thatch is?
Yeah.
Think of him.
I don't know. But here's the thing too is Instagram is different than reality.
Yeah.
So I guarantee he would say that it's not scalable if he's being honest with real estate investments. Okay, here's the other thing. This is a very important asset, right? It's an expensive asset. You got a lot of debt on it. You're personally guaranteeing it. You put money into it. How much do property managers make?
7% of month's rent.
They make more than that because of whenever leasing.
Leasing fees, but just the regular management fee, 7-8%, maybe 10%, nationwide. All right. So look up average rent nationwide on Google real quick. Median rent price nationwide. 1,400.
That would be my guess, right off the top of my head.
Let's call it 1,500.
Why don't we do what's the average rent in Austin?
1,500 is the median rent. That's ridiculous.
That's gonna come from houses, apartments.
It's not that important. My point is that on average the manager will make $150 if the rent is $1,500 per door nationwide. In Austin it's gonna be less because it's 7%, much more competitive management market. Now, would you work very hard full time on managing a property, managing tenant requests, managing maintenance requests, managing all the BS that comes with managing properties for $150 a month?
And you get all the liability. They sue the property manager, not the owner.
Correct, all the liability. But how hard would you work for $150 a month?
I don't deal with those people.
Yeah, you don't want to deal with the tenants?
No.
All right, that's good. I think we're agreeing on something today. So you don't want to deal with the tenants, and would you even do it for $150 a month?
No.
Probably not, right? So why would you give this person, you're probably one of your most valuable assets, who doesn't want to deal with the people, it's a thankless job, they have all the liability, it's all these things, pain in the ass, blah, 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 and expect them to do a good job overseeing your asset for only $150 a month? Right? Like they're probably not going to care about it that much. Would you agree? All right, so it is impossible to get good management, to really care, to get great management. You're never going to get a great manager for $150 a month. Here's the other thing that plays into the cash flow formula that I wasn't even calculating earlier, and this will play into your equation, is the cost to file for your taxes for the entity that owns your real estate, the cost to pay the bookkeeper, and all those things are also expenses that are going to come out and eat away at your cash flow. So I wanted to drive that home. What else we have on residential properties? So let's go through the pros and cons of commercial. Do you get appreciation? How do you get appreciation?
It's naturally
Naturally hold. Rents are going to go up. Values are going to increase. Cost of land is going to increase. Also, forced appreciation via raising rents and executing a business plan. Do you get cash flow?
possible because you scale numbers.
Bigger the property, bigger the asset, more cash flow, more opportunity to get cash flow. So you actually can cash flow in commercial properties. If you buy a 5-unit, is it going to cash flow? Probably not in Austin. If you buy an 8-unit, is it going to cash flow? Probably not in Austin. If you buy a 20-unit, is it going to cash flow? I'd say yes, but it's not going to be substantial, but you are going to be able to cover management company, you are going to be able to cover the vacancy, you are going to be able to cover the maintenance, the taxes, the insurance, pay a bookkeeper, get your taxes paid for, And any leftover that you have is probably going to go back into the property when something goes wrong, but at least you're not going to be coming out of pocket every month with that 20 unit. With the 50 unit, are you going to cash flow? For sure. All right, so you do get the cash flow. Is it a pain in the ass? Here's the thing that makes it not a pain in the ass, is you do get great management. Our shopping center that Timberly, Andy, and I own in Florida, it also depends on the market that you're in, right? Like if you're in Austin, you're gonna get a better management company than in Pace, Florida. But we do have a great management company in Pace, Florida. All they do is manage retail. They work in this area. They're the local retail managers and brokers, but they're really good. And they won't do it for anything less than $1,500 a month. That comes out to about 10%, give or take, but there's also a lot less management involved overseeing the strip center than there is overseeing this one single family home. Honestly, all they do is collect the rents. And they work for us. They report for us. They do what we tell them to do. They schedule things that we get them to schedule. But there's no management involved really. And we pay them $1,500 a month, which is much better than $150 over here. And so they do care about working for us. They do care about us as a client. The level of service is much higher here than it is here, right? And so the great management is what makes it not a pain in the ass. If one of my tenants moves out here there's 9 tenants there currently, and a billboard pays us a lease as well. If one tenant moves out here, how vacant am I? What's my occupancy? 9 tenants. 91%, right? So if one tenant moves out here, I'm 91% occupied, and I'm still cash flowing. If one tenant moves out of the single family house, what's my occupancy? 0%. How much money do I have coming in? 0. Okay? So the occupancy is better. Which one makes you feel more secure? Right? All right, is it scalable? How is it scalable? I just bought, this one property all in one fell swoop. If I wanted to go buy 9 tenants here, I have to go buy 9 individual houses, right? Okay, on this example here with the shopping center, we're actually raising the NOI within the first 12-ish months by 50,000. We're putting some money back into the property too, but we're gonna raise the rents by 50,000 within the first 12 months. And it is about a 7 cap market. So how much value did we create when we did that? This is the equation to figure out the added value. 714,000 of added value within 12 months. It's about a 50% increase because we're bought it for 1.45. When we raise it 714,000, it's almost a 50% increase in value creation, correct? If you bought a house like this house, in order to get 50% gain on the value, we're gonna have to hold on to this thing for, 8 to 10 more years to maybe get up to 650,000 that it's worth, right? Especially in these markets. Anybody know what the appreciation was on single family homes the last couple of years? Negative. It went down, let's just call it, whatever. It went negative, whatever the percentage is over the last couple of years. All right, and then in 12 months here, we're gonna gain 50%. Now, here's some other benefits that a lot of people don't realize. Who thinks that, my goal with this is to just explain with rationality the difference between the two investments. And that's all it is. Even though the residential properties have pretty much emotionally destroyed me because of all the BS you deal with, I'm also a very rational person, and numbers are just numbers, and some things obviously make more sense than others. But the problem was that I was thinking too small when I bought all these properties. And so what I wanted to hopefully establish with you guys is tell y'all that it is possible to either A, go out and buy these yourself with partners, or B, you can invest with other people who are doing these deals and probably do better than you would buying the house. But don't think small and just go buy a house because you think I've only got $10,000 or $20,000. You can still participate in these deals or put these deals together and bring people in to facilitate the cash needed to buy the properties. Yeah, if you don't have the cash or the balance sheet, etc., or the experience, you're not going to be able to do this. But you can partner up with people. You can bring in investors. You can find another general partner to buy this deal with. But I would, again, going back to the initial point and the kind of opening line here of everybody's goals are different. Everybody has different, needs and investment strategies, etc. But if you're wanting to grow a large real estate portfolio and have a portfolio of assets that truly will provide wealth for you and provide security for you, like I told y'all, we own 100 of these, give or take, zero security. I own 100 of them. The only way we can get our money out of these is if we sell them. And how easy is it to sell these properties right now? So I'm just telling you, if your goal is to build a portfolio of assets that provide wealth and security and cash flow and financial freedom, etc., just consider thinking a little bit larger and going over here. If your goal is to have a house here or there, and you're really not in it for scale and longevity and to really build something that will secure your future, then just go do whatever you want.